Hi there, welcome to Grain TV. It's Wednesday, August 3rd. It was an up day in grains, but very little enthusiasm to the upside. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, wheat was a leader to the downside, bouncing out the $4 mark, closing 9 1/4 higher, gaining up to 410.5, while corn was up 1.5 and beans up 1 1/4, although beans had been trading much higher, especially earlier in the session. Before we got into a round of selling pressure. News today, another round of export sales that were announced. Very strong deals done in soybeans with 697,000 metric tons. Most of that, of course, being from new crop delivery. In total, we've had 1.6 million metric tons of deals done in the last 6 sessions. That is positive, but the market continues to focus on very, very strong production potential coming this fall. Other export sales announcements: corn got a jolt by 290,000 metric tons from new crop. Yet again, we continue to see selling on the face of higher production potential. And let's talk about what some of those yield forecasts are coming out. We're seeing some private analysts show their cards right now ahead of USDA's crop report next Friday. So let's take a look at some of the numbers that we're hearing bantered about. First of all, in corn, we have a wide range of estimates. Land worth being at the very, very low of the spectrum, coming in at 160 bushels to the acre. That's based on satellite yield data, although they couch that estimate by saying based on August weather, we could see anywhere as low as 147 and as high as 175. On the other side of the spectrum, we have FC Stone that came out earlier this week with a yield of 175 and an overall production of around 15 billion bushels of corn. Lind Group coming out today with their forecast based on farmer surveys showing 171.4 as the yield and 14.8 billion as the crop size. On soybeans, a little more consistency here. Everyone's looking for better than USDA, but the numbers are around 48.8 to 48.6 right now between Lind Group and FC Stone. Again, Friday, a week from this coming Friday, August 12th, we will see USDA's first survey-based estimates of the crop, and that has the potential to be market moving based on what USDA finds in that first round of surveys. Other news out today: ethanol numbers were sort of a mixed bag. We had production up to 1 million barrels a day, up 6,000 barrels from last week's run, and stocks were up 213,000 barrels to 20.6 million. Really, the big news, though, in the EIA report was gasoline inventories, which were down sharply, surprising traders, and that got the crude oil market churning sharply higher, showing a reversal off of this low in the low 40 to high $39 range. We're up about $1.50 a barrel, turning higher as we continue into the later part of the trade session today. So that is a good sign if you're an overall commodity bull, because certainly crude oil has taken it on the chin since topping out at $51 a barrel and trading as low as $39 yesterday. So perhaps some strength in crude oil will have a spillover effect in the grain market. Let's take a look at soybeans. We've seen good export sales pretty much consistently every morning, but every morning as we come into the main trade session, we see selling take shape. Take a look at this 30-minute bar chart from the Grain Edge trading platform, which shows trading activity for all of this week starting in Monday. And what you can see is every day when we open that 8:30 trade session window, that we see sharp selling and selling throughout the day. So highs that are occurring in the overnight session are not holding and are eroding and actually turning negative in some cases. Today was another case in point of that, where we were actually up 10 at one point going into the break and actually only closed one higher today, selling off a little bit at the end as well to get down to that only one cent advance. So, overall, this is a market that continues to struggle with the potential for big crop numbers. And obviously, I think what USDA says on August 12th will have an instrumental impact on prices. We've traded lower on the expectation that USDA is going to find high numbers in that August report, and the real question will be, will the bears be confirmed or will they be surprised? Overall, I think given as sharp a decline as we've had, I wouldn't be surprised to see a little bit of a bullish pullback if USDA does disappoint the bears. So keep that in mind as you're making your marketing decisions, and looking forward to that Friday, August 12th crop report. As always, if you have questions or want to learn more how you can get assistance from Grain Hedge, visit us online at grainhedge.com and take a free demo of our trading platform and get our morning commentary and technical alerts. As a Grain Hedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.